Hey, good afternoon, guys and girls. Just a quick weekend update on Bitcoin. So, zoomed out version of, well, the 4 hour on Bitcoin. And I just want to emphasize levels, how important levels are today. So, if we looked at my zoomed out level, I've got three indicators here, but two main levels, and this is this key level. So, that was the all-time high in January this year. And then you can see how that level's been respected around that area, there. We traded around there for a while, and then now lately, that was such good support there for that vicious dump we're down, or that week we're down into that 40,000, 42, $41,000 area. Then the upper key level, obviously, you can see where it's been respected there. It was resistance, support, and we're just in the middle of here, so the market doesn't really seem to know where it wants to go now. See, it's like a channel. There was a lot of trading. There was a bit of trading. There was part of the downtrend, part of the probably what they call the bearish market, and towards April, I think May, this year. Oh yeah, that was that big dump in May. And then we recovered up to there again, and now we're just in that. So that's a very strong channel that we're in now, and I think we're gonna need to break it to either side quite soon. I'm a bit nervous for December. I'm expecting the market to go higher. December is always a good time to go higher. Actually November and December, but now November's been so, well, basically bearish because we've actually gone down. Okay, but nevertheless, let's continue. So, to be honest, I never like the market to go down, but I think that's what's going to give us the real good, like a springboard to go up if we go down again, because there's a lot of, is probably a lot of liquidity around this low here. People's stop losses are there. So I think the market needs to go down there, take out that low, and then there will be a lot of liquidity in the market to really run for, towards the end of December and January and February. But then my concern is that if we go down fast, there might be a lot of momentum in that market, and it might just keep on running, and then it might get a bit ugly. Because there's not much happening below here. Our next stop, well, there's a little bit of resistance there. There's a bit of resistance, but our next stop is once again going to be in the around $30,000. So lately, I just want to emphasize that the CME gap, it stands for Chicago Mercantile Exchange. So for some reason, all marketers sort of respect that. So the Chicago Mercantile Exchange closes on a Friday afternoon, which is really strange that it's still seen as a, how can I say, as a important exchange for cryptocurrencies, because cryptocurrencies never close. So, and then a gap starts to develop over the weekend. So I can just go into another chart to show you which one is it. I think it's this one. Yeah, CME futures. So that's how it looks like, that signal. Zoom in here on the daily. So you can see on my line there, you can see it's at the bottom here. The date is the 17th. The 17th of December. We're on the 19th now, so that's where it closed on Friday afternoon. See, there's a gap there as well. That was last week. So there's that CME gap of ours, up there. Sorry, there was another gap somewhere. Oh, there was a gap, but that was filled. So there's another gap there, above there, above that level there, 5905. Okay, so no, just an explanation of how it was formed there. Let me go back. Yeah, that's the top of that gap, so the bottom is around there, and that's the top. Yeah, okay, so that's why I've got that line marked, because that's quite a bullish magnet that will pull us up to the top. So yeah, we've had let's go down just one time zone. So yeah, you can see it. So clearly we've been forming a triangle here. Normally you expect it when it gets about 2/3 into the triangle, you expect a reaction, to the top or to the bottom. With this wick down to the to the bottom, and this like a descending triangle. It's normally a bullish sign, but Bitcoin, you never know, because there's a lot of big counter traders that expect the retail traders, we small guys, to react to this triangle, and then they will just wait for you and push the market in a different direction to get extra liquidity, which translates to taking our money, and then they run in the opposite direction. So I expect we might get a fake out, and that's why my theory of going down here and just picking up this liquidity and then going to the upside might still play out. So we're 2/3 through this descending triangle, but it's weekend, so I don't really. So 2 o'clock now, right now, it's actually there's one of the important time zones starting, but or sessions starting, but it's a Sunday, so I expect and then 15:30, just a little bit about an hour's time, another time zone starts or session starts, but it's New York normally, but that's also weekend, so they don't really open. But then, yeah, at 2 o'clock, where are we now? Yeah, 2 o'clock in the morning. There's another, the Asia market opens there, and I think we might have some action there, so we can expect either a run to the top or the bottom there. So levels, and these are, like I said in my previous video, this is all for free. I mean, you don't need to pay anything to be able to see these levels, including the CME, Chicago Mercantile Exchange. So you can just have a look at these markets that I have on the right here, and you can use that for your own list. So it's always good to just check on a Sunday where the CME gap is, because there might be a lot of volatility on a weekend, but remember, it normally wants to reset on the Monday to the CME. It doesn't always happen, but in the end it just tends to happen. Eventually the market doesn't actually run back to the CME, but because it trades on some other reasons, but the CME gaps are always closed. So there's also a level. I just wanted to emphasize these levels. So look here, over the weekend I was playing around here, and I got into this level here that so there was a downward trend there, and then the minute it broke it, look how perfect it came back to retest that level. So that's bullish, and it's actually worked out right. So the market started moving away from there. So that was actually a triangle. You could have drawn it from here and then down like that, and then 2/3 from where the triangles formed, 2/3 we were in. It's just a more or less, it's not really a theory. You can't trade off that 2/3. Actually, you have to wait for it to actually break the triangle. And then I'm just going to take you to my busy chart which I trade off to show you also levels that have been respected. So this morning I was a bit late for this move, but you can see I had that level marked out, and I had a key local level, also a level that I just picked up previously from really good reactions down there. And so we went through that level, and you can just, and I can say by now, when I see those long wicks up, that's like a sign that the market's run out of steam and momentum, and normally you will get a pullback after that, because it tries and it tries, and you can and there's an important level. So it's just something nice, to look out for. So to actually get into there, it takes a bit of guts, but I've had many successful trades like that, where I wait for that high wick. I don't never try and catch the high, and then I start playing with fibs and pullbacks and things, and then I normally get on that. There's always a retest, a Fibonacci retest, and then you can get in there and you can make some good trades from there. Then obviously I've got this key level in here. That was the other level I wanted. So there's a monthly here that's been really respected. Well, you see there we wicked. There's nothing else. It's just a monthly. We wicked through there. There it was a slight front run, but it was close to that monthly there. Or this morning early we first tested that monthly, came back, and then we ran through it. Coming down as well, retest on the monthly, wick through the monthly. Look now how the monthly's been acting as resistance there. And then the daily open, look how the daily open caught this drop here, so that's very important. So I'll show you on a cleaner chart, still for free, how you can get the monthly and the daily open without paying subscription fees. So back here, let's go to the daily, and then if you just zoom in, so there was that candle was yesterday close, so it obviously is green, so it closed on the top of it, and then it started the day there. So the daily open was 46,801, and that's never going to be 100% accurate, but 46, what did we say, 801, 46, 801. Let's just check it. The daily open 46, 800. Yeah, you see it's daily open 46. Whew. Oh no, yeah, there's the daily open 46, 800. Yeah, so it's really important to put these levels on your charts, and you can trade off of that. And then another thing that I wanted to show you, if we go in the 30, so the value area high. Let me just go back here. I wanted to show you point of control, local range value area low, local range value area low. So if you go back here, 30 minutes, let's just go on the 1 hour. So the local range, what I mean by that is this area here, since we came down into this zone here. So you take your fixed range tool, and from where we are now, just do that just before that big wick down. And then if you can zoom in a bit, and then I always just use this ray tool right there where that area starts on that line. See how easy it is to, and these tools are all for free, and that's such an important level there. And then the point of control as well. So what just like off the cuff, what will be really good here is look now at this triangle that we've got here, the triangle there, and where that point of control meets. If we can go through, a really bullish sign is if we can cross this point of control of this local range that we've got here, and look how well that coincides with that triangle's top trend line. So if we can break through here, I would like it to come to retest or retest that point of control. Let's just put that line in, it'll just make it easier for us to. So if we can break this triangle, maybe, well, firstly retest that trend line and then retest that point of control and then run up. That'll be so bullish and act of strength, a sign of strength from the market. Okay, so those levels are really, and then I just wanted to show you that monthly level. Let me just remove this, take these lines away, and I'm just going to go on the 1 month. I've showed you this before, but just a little recap. Zoom in now, yeah. So that was the monthly level. So you put your magnet on to get it accurate there where it's closed, only on the closer. So with other words, that's not a monthly level there, that's not a monthly level, not a monthly level. When it changes from green to red, that is a monthly level. Now it goes down, that's not a monthly level. Going down, not a monthly level. The turn here, that's a monthly level. Okay, so we were going down there and then we were going up, so that's a monthly level. But what I normally, I've got a template, so I color code them. The monthly is purple, and then it says they're monthly as well. And then you can just copy and paste that on the top there. So there's a monthly level, there's a monthly level, and you can see we're in that range now between those months. And that monthly level comes back to where, well, that's now on a month basis, but it's this monthly level here, 47177, that we've been reacting off so well. 47, sorry, no, that was a different monthly level. I used this monthly level. Oh yeah, this one is still respected, so apologies. So normally if you've moved through a monthly level, then it's not that powerful anymore, but look how powerful it was. It's been now lately. So sometimes I just keep the level for a while, and if I see it still being respected, I just keep it on my chart, and look how well this has served me today. And then for the same exercise, you can go down to the weekly. Shortcut is just 1W and enter. And then on the top there, so I will have there where the market changes, so that'll be a weekly, and I just color code that as well, yellow, and it says weekly, so I know exactly what level that is. And then obviously there was a weekly there before, but we've gone through it, so I'll keep it for a while to see if it's still being respected. And then obviously this is an important weekly level just below this monthly. So because the weekly is lower than the monthly, I will normally keep the weekly as support, but at the top I will keep the higher one as resistance. So yeah, so I do the monthly, the weekly, and the daily. So I'll just 1D is the shortcut and enter. So we can, I'll just use this weekly. So there will definitely be a daily there. And then I've also got it color coded with a like a bluish color there. So normally there I'll remove the weekly and use the daily, but see how well the weekly's been respected there, so I just keep the weekly on there as well. Okay, that's been me going on for too long. I planned this to be short, 5 minutes, but I hope this helps. So you've got something to watch out for. Watch this triangle, see how it reacts, see which of my options. So I'm going to be right both ways. I wanted to go up, but it could go down. So, but the reason I say it's good for it to go down is to pick up some liquidity here, and that, I think that will give it a lot of strength to actually run much higher than if it just breaks through here, and we might just keep on grinding in this area between that key level and that key level. So let's hope or even if it just fakes out this triangle and picks up the liquidity there, that'll probably be the best of both worlds, and then we have a bit of a run, breaking the top trend line and the point of control, and maybe this weekly and daily, and then the CME gap, and hopefully we aim for that monthly. Yeah, let's hope we all have get a good Christmas surprise, all of us that's in the crypto markets. Right, that's it. Cheers.